Okay, let's go ahead and start booking September. We'll show you an even faster way to book it. Again, it relies on general journal entries. However, as we showed during reconciliation, there are ways to essentially book a lot of things during one transaction, right? And we'll show it this time. So again, what we're going to do in this case, we're going to use end of the month. It will be very similar to when we book off the statement, which we will show in the following month, but in this case, it will be not of the statement, but again, we're going to show and demonstrate the power of general journal entry. So this case, it's going to be Invoices, September 2020. So let's get going. So first one is a credit card, right? So we know credit card is a liability. Liability goes up when credited. And we're going to enter the invoice number right here. Okay. What's happening here? We're buying supplies, right? That's our food purchases. This expense is going up. Right? So typically we would say, all right, save the new and let's go to the next one. But let's say we're in really crunch mode and we want to keep going. Next one is our containers, right? So that's our restaurant supplies. And again, it's paid with the credit card. So let's keep going. Liability is going up. We just got to adjust our invoice number. Okay, so in this case, our supplies, restaurant supplies, expenses going up, right? That's the offsetting entry. Let's go next. We're going to keep going, right? How long can this entry get? Again, we'll demonstrate the power of this wonderful interface. And again, we'll demonstrate that at the end of the day, like I said, doesn't matter how many debits and credits you have on both sides. What matters is that debits and credits equal at the bottom line. Okay. We have our cleaning supplies right here, and they're paid with a check, right? So now we're going to hit our bank account. Bank account is an asset, it's reduced when credited. Okay, so in this case, let's enter the check number right here. And on the next one, we're going to enter the invoice number. And we're running out of space, but we still have place to indicate some descriptions that will help us navigate there. So here it is, cleaning supplies. All right, cleaning supplies is an expense account, 6,400. It is debited, right? And in this case here, we have the check number. Here we're going to enter the invoice. All right, we're going to keep going, right? We're going to make this one a really long one. All right, so here it is. This one is a credit card. All right, liabilities going up. Liabilities go up when they're credited. All right, so here we will enter again our invoice number. All right, here it is. What's next? Our supplies on drinks, drink purchases going up. That's an expense account, goes up when debited, right? All right, we're going to keep going here. The next one is our utilities paid with a check, right? So we know that our bank account will be reduced right here. Therefore, to reduce it, it has to be credited. And here we're going to enter our check number. And in this case, it's our utilities, right? So our utilities expenses going up. Expenses go up when debited, 63,100. And here we will enter the invoice number. All right. Again, we still haven't clicked save and new, right? Oof, this one is getting long. All right. So here we have this very complex one. To finish it all off, we're going to enter all those multiple expense accounts. But first, we know that our bank account will be reduced, right? Because it's we're using check. Let's enter that one. And now we're going to detail all of these expenses, right? So first we have our rent. Okay, it's an expense. Expenses go up when debited. What else do we have? We have our insurance. Same thing. It's an expense. Has to debit it. Oh, hold on. Let's make sure we enter our invoice number. Next one is dues and subscriptions. All right. So So in this case, it's $50. And then we have our maintenance. Right, same, it's an expense, has to be debited. Okay, and the last one, we have our advertising and promotion for our artwork, right? We're paying overtime. So here it is, $95. And you can see that, again, as I said many times before, what matters is that debits and credits are in balance. You can see we entered quite a few, right? It doesn't matter. It doesn't matter how many debits you have on one side. It doesn't matter how many credits you have on the other side. And what matters is that these two, the sum of them are in balance. So you see, we booked all of those invoices, right, in one entry. Just make sure you date it as the end of the month. Okay, we're going to save a new. All right, we're done, right? Now we get to book our credit card receipts, and we will book it in the same way, right? We're going to show you how to do it in one entry. Amazing, right? But nevertheless, it's doable. So again, let's go to general entries. Okay. Okay, end of the month, right? Let's get going. All right, so again, we're going to hit them individually so that they show up individually, but we're doing it in one giant entry. It doesn't matter. You can have as many debits and many credits as you want, as long as at the end of the end, they balance right here, right? So we're going to do that. So let's get going. Liability goes up. We know that much. Fuel, right? That's now our expense right here. Goes up. Let's keep going, right? Next one, again, another fuel. It's a liability, right? Credit card is a liability. It goes up because we're paying with a credit card, right? So even though our expense is going up, we're not reducing our bank account, we're increasing liabilities. Liabilities go up when they're credited. Again, expenses go up when debited. There it is. Let's keep going. We ordered our accounting software. Isn't that awesome? Yay. Okay, so again, it's hitting our credit card. All right. Liabilities go up when they're credited. Therefore, we're going to credit our credit card account. Make sure that we reflect our. All right. And this one is going to be under dues, right? Dues and subscriptions, right? Because we have subscription to our accounting soft. So here it is. Again, expenses 62,800 are going up. So here it is. Debits and credits are in balance. Oh, we have payment. Okay. One more thing. Let's make sure we book it, right? And again, we can do it still right here, even though it's a payment. In this case, the liability is reduced, right? Okay, liability is reduced, therefore it has to be debited. But why is it reduced? Well, it is reduced because we're paying it from our bank account, and bank account balance will be reduced as well, right? Money is leaving it to pay down the credit card, so the bank account has to be credited, and the credit card has to be debited, right? So makes sense. See, we had debits and credits, and in case of the 21100, the credit card account in this entry, we both debited it when we paid it and credited it when we purchased. And it's a great way to reflect again how it works. Makes sense, right? We're buying, for example, fuel, and then accounting software. That increases our liability, right? Because we owe more money, right? We're borrowing to buy all those items. Makes sense. We know that credit card is a liability, and therefore it is increased when we credit it. What else is happening in the same entry? Well, we're paying down that liability, and when we pay it down, it is debited because it is reduced, right? So here we are. We don't have any more credit card receipts for September, and we're going to book it. Again, make sure the end of the month is right here. Saving new. All right, we're done booking